Folks, many members of Congress have been making aggressive trades to reposition themselves to take advantage of the current market sell-off. I've plowed through endless congressional disclosures, interviews, and tweets, so you don't have to. And in today's video, we're going to break down the top 5 stocks that Congress is violently buying. There's a big repositioning going on in light of tariffs, recession fears, and since these are all potentially made with insider knowledge from closed-door congressional meetings, well, it's very important to pay attention. But as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence before taking any action on any ideas presented. And quick plug, are you tired of missing big moves? Well, we've got you. Our ZipTrader newsletter is 100% free and hits your inbox every time a new hot trade emerges, a catalyst is set to explode, or a fresh congressional trade goes live. Be first, trade smart, or sign up below, completely free. Link down below. Okay, so we need to start with number 5, ticker symbol TNA, Direxion Daily Small Cap Bull 3X ETF. Congressman Tim Moore, a Republican from North Carolina, has been absolutely plowing into this ETF. You look at the disclosures here, we are talking 4 different filings of 4 different buy orders, 2 in the 50K to 100K region and 2 in the 15K to 50K region. We are talking at least somewhere around 200K in buys, and we were just given the notification of these on March 10th. So why might Congressman Moore be loading up on TNA right now? Well, consider what TNA actually is. It's a leveraged ETF that bets aggressively on the upward movement of small cap stocks. When markets rebound from corrections, historically small caps lead the charge. Additionally, small caps have been battered far harder than their large cap counterparts during recent volatility. This puts them in a prime position for explosive recoveries as sentiment turns positive. And of course, it doesn't hurt that TNA provides triple leverage, which magnifies gains if he's right. In other words, Congressman Moore isn't just confident that small caps will rally, he seems to be betting big time that they'll rip upward and multiply his returns. What's the bottom line here, Charlie? Well, Congressman Moore's significant stake in TNA suggests he's betting confidently on a strong market pivot, likely fueled by upcoming policy changes and or a favorable economic backdrop for small cap growth after this big panic we've seen. Look, I mean, there are several big catalysts that could drive TNA significantly higher. Number 1, Federal Reserve rate cuts. Historically, small caps outperform strongly when rates begin falling. And if you look out at predictions for the next couple of meetings, well, expectations are starting to pick up for at least 1 or 2 cuts. Secondly, after this tariff scare blows away, it's possible that you start seeing that economic euphoria come back, at which case the small caps are going to see some of the most outsized runs. And with TNA's 3x leverage, even modest market moves could deliver outsized returns quickly. So anyways, keep an eye on TNA. Clearly, Congressman Moore is bullish, and it may pay off big time for him. Number 4, NTIOF, for the National Bank of Canada. This is their stock, and Democratic Representative Ro Khanna from California has been plowing money into it. He filed a report with the government disclosing $250K to $500K worth of money newly invested in one transaction on the 5th. And if you look at the overall filings compiled by Capital Trades, he had 3 different buy orders total within a very short time frame. The $250K to $500K, the $50K to $100K, and the $100K to $250K. Now, if you follow Ro Khanna's trades, he tends to invest 1 to 15K at a time, not upwards of $500,000, which he's doing here. So this is substantial. He all of a sudden decided he loves Canadian bank stocks. So what's going on? Why would the representative all of a sudden be buying so much National Bank of Canada stock when we are in the middle of a massive trade war with our partner up north? We've covered Ro Khanna's trades many times in the past, and not only is he one of the most sophisticated tech investors, but he also represents Silicon Valley, so he's totally tied into that scene. But the National Bank of Canada isn't some trendy tech startup or AI play you'd expect Khanna to chase. It's in fact Canada's 6th largest bank, specializing in personal banking, wealth management, and financial markets. It's steady, conservative, and deeply rooted in the Canadian economy. So why buy this now? Why buy it now of all times that you could buy it? Well, Khanna seems to be betting heavily that the National Bank of Canada has something uniquely protective or opportunistic about it. Digging deeper, you'll find the National Bank of Canada is a significant player in Quebec, one of Canada's economic powerhouses, and they've recently ramped up investment in digital banking infrastructure. This digital push might be part of Khanna's rationale, anticipating growth in digital banking, potentially backed by conversations he's having with heavy hitters in Silicon Valley's largely tariff-exempt information and digital technology sector. as tariffs drive a gap between the US and Canada and cause the domestic industries in both to ramp up their own production capacity. Well, it's very possible that venture capitalists in Silicon Valley are using their connections with the Bank of Canada as a way to profit off the volatility in both countries. Ro Khanna's unusually large bet could signal he sees substantial upside or knows something politically or economically about US-Canada relations that the rest of us investors don't know. Political trades, as you know, often precede policy changes, and so while we may not have the full picture of what's going on, well, Khanna perhaps does. It's also possible that he's betting a bigger, more entrenched tariff war might end up making it harder for Canadian firms to access American capital, and thus he's trying to diversify into Canadian banks to be able to benefit from the potential boost they'd have in that situation. Number 3, APD, Air Products and Chemicals. This one is getting lots of buy orders from multiple members of Congress. Congressman Jefferson Shreve, a Republican from Indiana, just disclosed buying $15K to $50K. Ro Khanna again disclosed buying $50K to $100K. John James and Scott Franklin bought last year as well, both House members. Now, why would they be buying this? And why do you have two buying and disclosing at the same exact date? After basically no other Congress folk reported buying it since last year, why all of a sudden do you get two buy orders at the same time, followed at the same time? Well, let's back up a second. What exactly is APD? Well, APD is a global leader in industrial gases, supplying essential products like oxygen, nitrogen, and hydrogen to various sectors, including energy, healthcare, and technology. Notably, APD has been at the forefront of hydrogen production, which is increasingly recognized as a key component in clean energy initiatives. But why exactly might APD specifically thrive under a Trump administration, given Trump's historically skeptical stance on climate initiatives? First off, Air Products and Chemicals isn't just any green energy stock, it's a global powerhouse in the industrial gas space. We're talking hydrogen, nitrogen, and oxygen. Essentials powering everything from heavy industry and manufacturing to technology and aerospace. APD has deep ties to critical U.S. manufacturing sectors, including steel, semiconductor production, healthcare, aerospace, and even national defense. Under Trump's administration, which heavily prioritizes American manufacturing, reshoring industries, and national infrastructure, APD is uniquely positioned to win big. With Trump's aggressive push to rebuild America's manufacturing strength, while companies like APD stand to see explosive growth, especially with his more protectionist policies. And that might be why you're seeing some Republicans snap this up, right? Industrial gases are fundamental to revitalizing American manufacturing, and APD is a key player supplying the exact raw materials necessary for that resurgence. Additionally, Trump's administration is strongly pro-energy independence, which means increased domestic oil and natural gas production. APD's gas separation technology and industrial gas products are crucial components in oil refining and natural gas processing. If the U.S. pushes forward with expanding domestic fossil fuel production, something Trump has consistently prioritized, well, APD would be a direct beneficiary, seeing increased demand across multiple product lines. Another crucial factor is APD's positioning in the semiconductor industry. Trump has previously prioritized domestic semiconductor production as a national security and economic imperative, and APD supplies essential gases critical in chip manufacturing processes. With Trump likely to ramp up incentives for domestic chip production and reshoring from countries like China, well, APD would be perfectly placed to capture increased demand from new chip plants springing up across America. Moreover, APD isn't just a green play despite its hydrogen focus. Hydrogen production isn't exclusively environmental, it's also industrial, used heavily in refining petroleum and in various chemical processes. Trump's America First economic stance favors domestic industrial growth, reduced reliance on foreign energy and chemical sources, and lower regulatory hurdles for heavy industry. This means APD could benefit significantly from loosened regulation, streamlined permitting, and reduced environmental hurdles that allow rapid expansion and higher profit margins. The recent bipartisan stock buys from Congress could indicate they're anticipating upcoming legislation or executive action from Trump's administration focusing heavily on infrastructure or, again, manufacturing. Congressional insiders often have early insights into congressional spending priorities, potential infrastructure bills, or incentives aimed at revitalizing domestic industry. Another major catalyst under Trump would be increased military spending. APD provides essential industrial gases for the aerospace and defense industries, including rocket propulsion, defense manufacturing, and advanced military equipment production. Given Trump's strong track record in bolstering military budgets, APD could naturally benefit from expanded defense contracts and growth in related industries, and that might be why you're seeing some congressional snapping up of this. Number 2, LPLA for LPL Financial Holdings. Senator Mark Wayne Mullen just disclosed a 50 to 100K buy order on this, and that's quite a lot for him, actually, signaling some significant conviction behind this trade. So what's the deal with LPL Financial, and why might Mullen be so bullish? Well, first you got to go through a quick rundown on what this even is. So LPLA is the largest independent broker-dealer in the U.S., serving as the go-to platform for thousands of independent financial advisors. They handle investment advisory, brokerage, compliance, technology, and operational support, letting advisors focus on their clients without worrying about administrative headaches. Now, why might Senator Mullen be bullish? Well, congressional insiders like Mullen often have early insights into regulatory shifts or legislative actions that significantly impact financial services. Given that LPL's profitability can swing heavily based on regulatory frameworks, well, it's possible that Mullen expects upcoming legislation to benefit independent advisory firms. Additionally, LPLA has been consistently expanding its market share, recently attracting a wave of financial advisors away from larger Wall Street firms. Senator Mullen could be betting on continued growth driven by industry trends toward independence and away from traditional commission-heavy brokerages. There's also the possibility that Mullen anticipates strategic moves or mergers involving LPLA, or perhaps he's expecting strong quarterly earnings based on what he's hearing behind the scenes and what he's seen in terms of trends on advisor recruiting numbers or rising interest rates which positively impact LPL's profitability. Looking ahead, several potential catalysts could drive LPLA higher. Number 1, continued advisor growth. Number 2, potential M&A activity. Number 3, earning strength. And of course, number 4, regulatory tailwinds, possible upcoming legislation or regulatory adjustments favorable to independent advisory firms could really drive this stock up, and that's where Senator Mullen might just come in. Senator Mullen's purchase might signal he sees significant upside in LPL Financial, possibly fueled by insider expectations of industry-friendly policy shifts, upcoming company announcements, or continued robust growth in advisor recruiting. Number 1, HWM, Howmet Aerospace Inc. Senator Ashley Moody from Florida just disclosed buying 50K to 100K of this stock, and it's also owned by Congressman Byron Donalds, also from Florida, and Michael McCall from Texas, who owns multiple six figures worth of this stock. Now, why might these politicians be loading the boat with HWM stock? Well, first, let's break down exactly what they do. So they're a heavyweight in aerospace and defense manufacturing, specializing in high performance components like jet engine parts, fasteners, titanium alloys, and advanced materials critical to aerospace defense and even space exploration markets. Given the unfortunately rising geopolitical tensions globally, think Russia, China, and the Middle East, well, there's an expectation of significantly higher defense spending coming down the pipeline. Politicians are usually quick to position themselves in defense stocks when government contracts or increased budgets are about to flow, and that's exactly what's likely happening here. The fact that both Senator Moody and Congressman Donalds and Michael McCall, all politically influential and knowledgeable of upcoming legislative priorities, are investing significant sums, suggests a strong expectation of policy tailwinds, favorable regulatory moves, or new government defense contracts heading toward HWM. So what's the bottom line here, Charlito, who's just looking for a rally-to? Well, this is a classic follow the money scenario. We love following the money here at ZipTrader. Anyways, folks, that caps off today's video. And as a reminder, are you tired of missing big moves? Well, we've got you. Our ZipTrader newsletter is 100% free and hits your inbox every time a new hot trade emerges, a catalyst is set to explode, or a fresh congressional trade goes live. Be first, trade smart, or sign up below, completely free. Link down below.